In the vast world of Pokemon, trainers are always on the hunt for the rarest of them all. In the investment landscape, we seek those rare, unparalleled opportunities. Could Petron Corporation be the legendary Pokemon of investment opportunities? Our journey starts in 1933. Starting in Miraveles, Bataan, with a 25,000 barrels per day capacity, it transformed under Esso's acquisition in 1953, marking its first major expansion. The Philippine government's 1973 nationalization led to its rebranding as Petrophil Corporation. Merging with National Oil Company in 1988 further solidified its national importance. Post 1994 privatization, Saudi Aramco acquired a stake, catalyzing its rebirth as Petron Corporation. This era saw international expansions, notably to Malaysia, and diversification into petrochemicals. As a subsidiary of giant San Miguel Corporation, Petron spans refining, marketing, and specialty businesses. Its advanced Bataan refinery, widespread retail network, and specialty ventures like LPG and aviation fuel signify its comprehensive reach. In essence, Petron Corporation embodies a legacy of transformation, resilience, and dedication to fueling the future. From its nascent stages, Petron has evolved to dominate the Philippines' oil refining and marketing sector.
Its growth isn't just charts and numbers, it's about vision and people. Steering Petron forward are the visionaries, dedicating their efforts towards world-class products and sustainability.
Petron boasts a diverse range of subsidiaries, including petroleum, leasing, marketing, and insurance. While they benefit from both domestic and international revenues, notably from Petron Malaysia, our focus today is specifically on the petroleum sector of Petron Philippines. To fully grasp Petron's prowess, let's dissect its blueprint.
Going into more detail with regards to Petron's business model, key partners comprise of crude oil suppliers with significant supply agreements such as Saudi Aramco and Kuwait Petroleum Corporation. Some of their fuel additive suppliers are ExxonMobil and their very own internal blending facility. Sea logistics and transport are provided by a variety of logistics contractors. Other partners involved in customer relations are San Miguel Streets, Capillary Industries based in Singapore. Petron is primarily involved in the downstream portion of the oil industry. Key activities involve petroleum production of LPG, gas, diesel, kerosene, assorted lube oils, petrochemicals, polypropylene, and asphalts. Other key activities include facility leasing, marketing, research and development, finished product supply and distribution, and activities classified as others, such as the provision of technical customer assistance and loyalty programs. Petron's physical resources comprise of crude oil inventory, finished product inventory, storage and retail facilities, plant equipment, and manufacturing plants. In the human resource spectrum, Petron employs a variety of experts in the field of petroleum and petrochemicals, along with personnel that can deliver their products to their customers. For value proposition, Petron's locally produced fuel additives respond well to the needs of the Filipino. Petrochemical and lube production are also world-class and competitive in terms of quality. Petron also shares the same values of its parent company, the San Miguel Group, where there is a commitment towards nation building, the creation of work opportunities for the Filipino. Petron also has corporate ESG policies in place, such as environmental stewardship, social well-being, and good corporate governance. Petron's mode of customer relationships are accessible and reliable, in the sense that retail customers are able to quickly refuel at Petron station nationwide at competitive prices and with loyalty rewards. They also boast an extension of effective technical support that is both strategic and collaborative. They are consistent in their supply, pricing, and support for commercial and business clients. For customer channels, Petron provides awareness for its customers with regards to in-person sales, traditional advertising, digital marketing, and community engagement. In terms of evaluation, Petron provides clear offerings on communication and sales team engagement. Petron's purchasing channels involve physical and online retail services, along with tailored commercial sales and supply agreements with customers. Petron is able to retain consistency in the delivery of high-quality products to strategic locations that are either leased or franchised. After-sales service, loyalty programs, feedback channels, and online support is also provided so as to enhance the overall customer experience. Petron's customer segments are both domestic and international, specifically in Malaysia. These segments are mass market retail, industrial, manufacturing and energy, and aviation and marine industries. 99.60% of Petron's revenue is attributed to the sales of petroleum and petroleum products. The remaining 0.40% is divided between its revenue streams from its facility leasing, marketing, and other segments. When discussing Petron's cost structure, we must consider the factors that drive their costs. These are logistics and transport, safety and environmental stability costs, plant maintenance, human resource costs, and advertising and marketing costs. Primary cost drivers, however, are in the sourcing of raw materials and the production of finished products. The sourcing and pricing of raw materials is dependent on foreign factors. Their finished product is also subject to strict government regulation and taxes. When considering the market type Petron is competing in, it exists within a perfect competition, wherein market players compete relative to competitive prices. With this in mind, we can see that Petron functions under a cost-driven model. Their costs determine their prices, and their prices determine their competitiveness.
Petron thrives on collaborations, from global partnerships with giants like Saudi Aramco to local alliances with food and service chains. Their operations span from producing superior petroleum products to extending their reach into restaurants. Their unique selling point, though, is world-class production standards and a commitment to environmental stewardship. Their bond with customers is both strategic and personal, catering to a wide audience from mass retail to large corporations. And driving this colossal machine are key resources, both human and infrastructure.
Since 2017, Petron has seen fluctuations, but 2022 marked a remarkable rebound, with sales surpassing pre-pandemic figures of 500 billion pesos. Growth has been attributed to an expanding network of stations, enhanced production capacity, and higher fuel prices. Since 2017, Petron's margins have experienced varied trends. The chief influencers of their bottom line have been COGS and gross profit, as evidenced by the parallel trajectories of OPM, NPM, and GPM. This historical pattern largely stems from the consistent addition of stations annually and the amplified capacity of the Bataan refinery following the completion of RMP2 in 2016. It's noteworthy that in 2021, Petron achieved a GPM of 6%, giving a significant boost to that year's profits. This uptick was the result of persistent refinements in refinery operations and the strategic closure of select unprofitable stations. However, 2022 saw an increase in COGS, influenced by the mid-year recommencement of its CME plant and the spike in crude oil prices due to the Russia-Ukraine conflict in the year's second quarter. Petron consistently maintained a current ratio above 1, except during 2020 and 2021. The slight dip was a result of reduced inventory and receivables during the pandemic. The quick ratio indicates a significant reliance on inventories as part of its current assets. For a capital-intensive company like Petron, a higher debt-to-equity ratio is anticipated compared to other firms in other sectors. Since 2017, the D&E ratios have consistently remained above 2.5. This underscores Petron's significant reliance on debt for its operations. However, it's worth noting that the company has effectively leveraged this strategy, consistently enhancing equity returns over the period. We analyzed Petron's fixed asset turnover ratio. The company achieved its peak ratio in 2022, hitting 5.02. This surge in ratio can be attributed to the substantial rise in 2022 revenues, demonstrating the company's prowess in generating enhanced sales while maintaining a consistent level of fixed assets over the observed period. In the Philippine market, Petron stands as a key player. Their widespread network of fuel stations is evidence of their dominant market presence. While their strategy as a low-cost fuel provider gives them slimmer profit margins compared to Shell, their efficiency shines through in operational cost, as seen in their OPM and NPM figures.
Based on the Oil Industry Management Bureau year-end comprehensive report for 2022, Petron leads the petroleum products market with 21.39% market share. Shell follows close at 15.63%. Their widespread network of fuel stations is evidence of their dominant market presence. In 2022, Petron finished the year with around 1,900 stations all over the Philippines. On the other hand, Shell disclosed that around 1,100 stations were operating for the same period. Based on the latest AFS, parent company Petron registered revenues of 857.64 billion. Petron Philippines contributing the biggest chunk of revenue, around 412.84 billion, equivalent to nearly 50% of overall sales. Against Shell, which posted a total sales of 291.48 billion in 2022. Petron clearly maintains its position as the market leader in the Philippines. Looking at Department of Energy's recent report on fuel price watch in the Philippines, particularly from Quezon City data, Petron clearly offers the most affordable fuel among the top players versus Shell and Caltex. These figures support our comparative analysis between the top two players in the industry. Taking these into mind, Shell's gross profit margins are expected to be relatively larger compared to Petron's, which has been the actual picture throughout the years. Despite slimmer gross profit margins, Petron's operational efficiency shines through in operational costs, as seen in their operating margins and in their net profit margin figures.
Despite challenges in 2020, Petron showcased its resilience, reinforcing their position as an industry leader. Driven by a surge in consumerism, we see a boost in car sales equating to more fuel needs. Naturally, this results in a surge in petroleum sales. Boosting consumerism, a rise in remittances and greater disposable income. This financial empowerment shifts spending habits. Today's consumer is discerning, prioritizing smart spending. Fuel is a prime example. As commuting grows, fuel expenditure rises.
The Filipino oil and gas market generated total revenues of $37.5 billion in 2022, representing a compound annual growth rate of 13.7% between 2017 and 2022. In terms of market volume, the Philippines held a market share of 1.1 in the Asia-Pacific region's oil and gas market. According to information from DOE's Philippine Energy Plan 2020 to 2040, and as of June 2021, the nation's total petroleum reserves were assessed to be 68.7 million barrels of oil, 637 billion cubic feet of gas, and 27.9 million barrels of condensate.
In essence, as the economy shifts and consumer behavior evolves, Petron is perfectly poised to harness these growth opportunities. Numbers don't lie, and when it comes to Petron, they paint a fascinating picture.
Taking into account our findings from the financial, competitor, and economic analyses, the group presents the financial forecast for a subject company, Petron Corporation. In the preparation of the forecast, the group notes three key factors in projecting for the company's performance in the next 5 years. Number 1, crude oil price trend. The group considers this a key factor as based on the company's AFS, through the years, Petron has recognized the influence of global oil prices on its revenues. This has already been proven during the pandemic, when low fuel prices, paired with low demand, drag revenues down, resulting in losses for 2020. On the other hand, the spike in global prices due to the Russia-Ukraine war also drove up revenues in second quarter of 2022. With data on projected global oil prices in the next 5 years, the group used the trend to estimate the same behavior for Petron's revenues, given that its petroleum segment is the major contributor. Number 2, Petron's volume production. The group consulted with key persons within the subject company and gained crucial info on Petron's current refinery capacity for both Philippines and Malaysia. Along with information disclosed on company's AFS, this helped us estimate Petron's volume production in the following years as it prepares to accommodate future oil and gas demand, given our optimistic economic outlook. And number 3, Petron's future expansion and optimization plans. As disclosed, Petron has plans to further expand its retail network both in the Philippines and Malaysia. The group used the company's disclosed CAPEX budget covering the next 3 to 5 years as the basis for estimating the expected expansion costs and expenses. Aside from expanding its market reach, we expect the company to improve on its margins as Petron continuously conducts optimizations on its refineries following the completion of RMP2. Its cocoa methyl ester or CME plant is expected to be operational by 2025. This will also help improve the company's diesel margins. All of these information were considered in the group's projections. Looking at Petron's assets, there's a clear upward trend. From 2018's 358 billion, projections soar to an impressive 506 billion pesos. Sales figures mirror this optimism. After a slump in 2020, possibly due to pandemic-induced challenges, sales are expected to climb steadily, reaching nearly 920 billion by 2027. Petron's operational muscle, well, the company's operating income is forecasted to grow significantly from 17.68 billion in 2022 to a projected 35 billion by 2027.
Net income, an essential metric for potential investors, indicates profitability. Petron's journey here is remarkable. From the challenges of 2020 and 2021, the rebound is significant. By 2027, we're eyeing a net income of 16.78 billion.
It's a balancing act. While total liabilities show a slight uptick by 2027, the company's equity is forecasted to grow robustly, underscoring the firm's financial stability and increased value for shareholders.
In our recent assessment as of October 20, 2023, Petron Corp stands at 3.40 pesos. Given our detailed computations, we anticipate a potential rise in its price, aiming towards 4.42 pesos. It's crucial to underline that our projection is grounded in assumptions detailed in this video and estimates derived from Cole Financial. However, like all financial forecasts, there are inherent risks and no guarantees. Based on our analysis and the current valuation, we find Petron Corp to be undervalued, leading us to recommend a buy position. We expect the stock to witness an upward trend in the near future. Always invest wisely and consider seeking financial advice from financial professionals like us here at Dynamite. After months of research, Dynamite has discovered that, in recent years, Petron Corporation has showcased robust financial growth with its net income on a consistent uptrend and a solid 6% revenue spike. The firm prides itself on a commendable debt-to-equity ratio of 0.67, reflecting a well-balanced financial strategy. Liquidity isn't a concern either, with a current ratio of 1.28 and sustained positive free cash flow, paving the way for ambitious investments. Operationally, Petron stands tall with 2 refineries, boasting a combined capacity of 268,000 barrels daily and a sprawling retail presence of over 1,900 stations in the Philippines and Malaysia. Their forward-thinking approach is evident as they invest in refinery expansion and diversify into sectors like power generation and LNG, broadening horizons and mitigating risks. To sum it up, Petron Corporation isn't just an industry leader. It's a blueprint for sustainable growth and innovation in the energy sector.
The horizon looks promising, with potential growth in operating income and net income that signals Petron's resilient trajectory. It's evident that Petron is geared for the future.
In this journey, we've traversed Petron's history, decoded its operational blueprint, and dissected its financial muscle. Now the question remains, is Petron the legendary Pokemon in the investment world?
With its impressive track record, strategic operations, and promising financial outlook, perhaps it's time for investors to make their move. So trainers and investors alike, is Petron the rare catch you've been seeking?